Hi everyone. Oh, I should get up for this one. This is video 2 for chapter 18, where Smart Touch Learning miraculously changes into a manufacturing business. And they're going to be manufacturing their own tablets. And we're going to see how manufacturing businesses work. And as I mentioned in the last video, it's basically an overview of managerial or cost accounting, which means the costs within an organization to either make or buy a product or perform a service. Any type of business can use it, and they do use it. So in the last 2 chapters in our semester, we are going to be talking about manufacturing businesses. So in this video, I kind of chose, it's pretty easy, this chapter and the next chapter, but I chose the problem. It's called P1836. It isn't like the lab problems. The lab problems are much shorter and easier than this. But 2 of the elements, requirement 1, the schedule of cost of goods manufactured, and this last requirement 4, the unit cost per each one manufactured, each unit, is like your exercise in your homework 1820. And this piece right here, this requirement 1, I think is the hardest thing in the chapter, because it is fairly easy, and they do a great illustration of it in the chapter. So again, 1 and 4 are like 1820 in your exercises. And the add-ons are just kind of a written answer, which I'll go over in just a minute, and an income statement, which is not new. Okay? So we'll start with requirements 1 and 2, which are here. I guess I got this on the wrong side. So this is Chewy Bones, and they give you them on page 1001, if you can believe that. We've done this whole book, by the way. By next week, it'll be totally done, every chapter in this darn book. So, Chewy Bones manufactures its own brand of pet chew bones. At the end of December 2018, these are the balances. The accounting records show the 3 pots of inventory. Again, inventory differs for a manufacturing business because they have 3 different kinds. They have raw materials that they make the products with, work in process, which is what they're working on, and then finished goods, it's done, it's ready to be sold. So they show you that for the beginning and the end of the year, and then they show you other information that you're going to need to perform the tasks they ask for, such as the list under other information, and we'll pluck those out as we need them. As you can see, I did what I've been doing in the last several chapters. I did it ahead of time. It's neater and it saves time when we're doing our videos. So I'm just going to go over how to do one. Again, this piece, the schedule of costs of goods manufactured, I think is the hardest thing about managerial or cost accounting. Some people call it managerial, some people call it cost. It's really the same thing. It's about accounting within an organization. That it's basically for managers, okay? So they can make good decisions. So they want us to prepare one of these schedules. Let me just move this, it's kind of too far away. And for year ending 2018, the thing about manufacturing is you need to have the cost of goods manufactured because it goes into the cost of goods sold. In order to figure out the cost of goods sold on the income statement, you need that piece. You can't do it without making one of these first, unfortunately. Anyway, there's a formula to follow in making these. You always start out with the work in process inventory. It says that they had 0 work in process at the beginning of the period. If there was a number, if there were a number there, we'd put it in. And then our 3 elements of cost are direct materials, direct labor, and then the overhead, which is everything indirect. So we're going to put all those 3 elements of cost and get our total cost of goods manufactured. And then we're going to subtract the ending work in process to get what it cost us to produce what we produced this period. So we have our beginning direct materials right from the book. If you're on Pearson, it'd be in the little icon, you'd get that information if you're not looking at the book. Direct materials would be $13,400, and then the purchases of direct materials would be in the other, and that's $39,000, right here and here. So you had available materials to you to work with, $52,500. Subtract the ending direct materials, which is $10,500. I'm reading it right from the book. If you're online and on Pearson, you can see it in the little icons. $10,500. So we used $41,900 worth of direct materials. Then the direct labor is easy. They always just give it to you. The direct labor is in the other. It's the last thing, $16,000. Okay? And now we have to figure out the overhead, which there's three things that go in the overhead. And that's the janitorial services, and that is $900. The utilities for the plant, $1,200, and the rent on the plant, $9,000. So those are the three manufacturing overhead, which would be expenses exclusively for the factory. They usually call the plant. Add them up, $11,100. So the total manufacturing costs would be direct materials plus direct labor plus the factory overhead. Add them all up, you get $69,000. Now, if there were a number up at the beginning work in process, you'd add that in, but there isn't. So the total we have to account for is also $69,000. One last thing left to do is the ending work in process has to be subtracted because, of course, that's not done yet. So the ending work in process is $1,500. Subtract. Total cost of goods manufactured, $67,500, which you notice it transferred over to the cost of goods manufactured in the cost of goods sold section of the income statement. You're going to see this for a manufacturing business, this cost of goods sold section. Okay, they're not just going to tell you what the cost of goods sold is. You kind of have to figure it out. Beginning finished goods plus the cost of goods manufactured equals cost of goods available. $67,500. That's a 7. I can't read my own writing. Minus the ending finished goods inventory, which is from the book, $5,400. So here's our cost of goods sold section. Beginning plus cost of goods manufactured equals available, right? Goods available minus ending finished goods, which means the ones that didn't sell. Cost of goods sold, $62,100. The net sales revenue was given at $115,000. So subtract your cost of goods sold for your gross profit of $52,900. Then we have our other expenses, selling and administrative. This is in the other section. We have the sales salaries, $5,100, the delivery expense, $1,700, and the service hotline expense for the customers, $1,600. Altogether, total selling and administrative, $8,400. So we're going to subtract that from our gross profit. $52,900 minus $8,400. Operating income, $44,500. Requirement 1 and 2. Requirement 3, they ask a question, and I'm just going to sit so I'll be closer to the book when I read it. Let me bring this over here for a sec. Okay, if you can read my lovely scribble there, I do the best I can. How does the format of the income statement for Chewy Bones differ from the income statement of a merchandiser? Well, we kind of just talked about that with you. It's basically that section, the cost of goods sold section. For a manufacturing company, the cost of goods sold manufactured, right? It's based on the cost of goods manufactured. You need that number in order to get cost of goods sold. And the change in finished goods inventory. Finished goods inventory was 0, and the ending finished goods inventory was 5,400. That's a change, right? The rest was sold. So cost of goods sold would be the 62,100. And if there were any beginning, we would have had to add that in. So that's for the manufacturing. For the merchandising, we know cost of goods sold is based on what's purchased because they don't make anything. They buy it and resell it. And the change in the merchandise inventory. It's beginning inventory plus purchases minus ending inventory equals cost of goods sold. So it's really the same type of formula, we just use different criteria because we have our 3 different types of inventory with manufacturing. So that would be good enough for requirement 3, basically saying it's the difference between the cost of goods manufactured for cost of goods sold versus the cost of goods purchased. And the change in finished goods inventory versus the change in just what you bought inventory. That's good enough. Anything like that will be fine. And then requirement 4 is the easiest one. You're going to be doing, in the last 2 lab problems, I believe it's service businesses, if I'm not mistaken, unit cost, like per service. This one is unit cost for the production here. They want to know how much does 1 bone cost to make, so to speak, 1 unit. So the total cost of goods manufactured, again, was $67,500. That's how you get unit cost for a manufacturer. And then divide it by how many that was made, and that's given somewhere. In number 4, they manufactured 17,500 units. So that's going to be your divided by. Okay? So 67,500 divided by 17,500 units produced. Every unit cost them $3.86. Very important information for the people planning and checking their budgets and seeing if they're on target, how to improve on that cost, always trying to keep it as low as possible, because remember, they're going to sell these, and just like a merchandising business, they have to make a profit on it. So it's very important to know how much each one cost. Okay, so that's it for this video. So tackle the homework. It's a short assignment. I think there's 4 exercises or 3 in 2 labs. It's short. It's about half the size of what we had before. As I mentioned in chapter 17 was like that too. So if you have any questions, just let me know. And I'll see you next time for our last chapter.